we look at the retail space at the moment, Clicks is certainly in the sweet spot with regards to their pharmaceuticals and general well-being. I mean, you can go in Clicks and buy almost anything there, but I think their dispensaries have certainly helped them a hell of a lot, and we're seeing a lot of defensiveness in that sector at the moment. So Clicks is one of our number one picks. It's just that, everything in the retail sector is getting a little bit expensive at the moment. So the results are great. It's fantastic. Their distribution was up quite nicely as well, but it's a very expensive share. So the question is, now we're going to go out and buy the stock? Probably not. The results just back up a very good return in that stock, and that's really done well even throughout the economic crisis that we have seen, and that stock up tremendously in a relatively short period of time. But yeah, great results. We really like the company, and we regard that as a hold at the moment, not as a buy.
Pick n Pay, also the view that this one is looking relatively toppish, given what it needs to achieve in the second half, some 40% growth off these levels to justify its price at the moment.
Still, I think the thing is that people are buying Pick n Pay mainly for that distribution, that dividend income, and as long as that is increasing more than inflation, and this time it increased 11.3%, it's certainly exceptional. So you're getting a very, very good income. So it's always difficult to sell something even though it is high, because you're still locking in that fantastic tax-free income. At the moment, it's always, people read the results, they think it's awesome, and they go out and they want to buy the stock. Problem is, the stock is too expensive, in our opinion, as well. So the question is, what do you buy in the retail space? Well, there's very little at the moment, and quite frankly, I would rather hold a Pick n Pay, rather hold my Clicks, than going out and buying more at the moment. But
Pioneer
great results.
Foods, that trading update out, HEPS expected to be down 11% for the full year. You're smiling. What is
I'm
up your
smiling
sleeve
because I haven't had a look at it.
No, I see.
I don't look at you, please.
Marion Roberts.
Marion Roberts as well.
Marion Roberts.
Sure, massive movement in that stock recently, in fact in the whole sector at the moment, and some difficulties starting to come out again. This is the whole story about buying these construction stocks that have interests overseas. You've got much higher risks, and obviously you're starting to see that foreign exchange risk starting to come through, and more talk of cancellations as well. So I'm a huge advocate to stay away from the Marion Roberts, the Group 5s, and go for the more local guys like the Basil Reeds and the Ralbegs, and I keep on shouting out Basil Reed. So, Marion Roberts is great. A lot of people go out and buy the stock because it's on, their top list of construction companies. But I still think you can do so much better by looking at the more local chaps, where you don't have that issue with foreign exchange. You don't have that issue with a massive cancellation of these really expensive orders that they've got from overseas. The local guys concentrate on the road construction and pretty straightforward and simple projects where the margins are a lot higher and the risks are a lot lower.
I think my guests last night, Richard and Royce from Obsidian Capital, concur with that view on Basil Reed.
Someone agrees with
Local
me.
is lacquer in their view where construction stocks are concerned. Yeah. CMH came out with results recently. Are you going to smile at me now? Can I go further? I looked at that.
No, please, continue. They seem to be turning things around. I mean, CMH is I think it's your only pure car retailer.
They had 17% drop on their top line, but their earnings per share up 106%, largely as a result of
it's coming from a very low base, and they've cut
as well.
a lot off the table.
Big reprieve on the tax line.
I'm still not interested, really. It's a very tough sector at the moment, and to go, into a company that is exclusively in car retailing, I would be a little bit dubious. I mean, you do have the option of going for Bidvest with the McCarthy holdings there. You could go for Imperial, obviously, and then Supergroup if you dare. It's just a very tough sector at the moment. Car sales seem to be bottoming. The interest rate was kept unchanged. People seem to have a little bit more money in their back pockets, but we're not seeing a massive recovery in that sector. So as long as these companies can keep their costs under control, it's okay. But we really need to look forward, and I still think there are still a couple of years of not disaster, but gloom and doom in that sector before things really get going. There's just better options out there at the moment, Bronwyn.
That 27,000 point level on the JSE all-share looming ever closer. Where to from here?
Where to from here? It's a good question. 27,000 is not the big level in my opinion. 28,000 is the next level. I really thought we would top out at 25, and literally a couple of weeks later we up 1,700 points more. Technically,
you still got the cash in the sidelines?
No, not really. I actually managed to go back in the market. Look, I'm fully invested, but obviously from a shorter term point of view, here is that, we're getting to a stage now where it is starting to get a little bit scary at the moment. You're starting to really think, wow, are we really sustainable at these levels? I've done so well with my major resource company. Shouldn't I take my 100% profit in some cases? The question is, the markets want to go up actually, and the trend is your friend until the end. And even at 33,000 points, the trend was still your friend, and it did end eventually. So I think we have to sit back and say, where are we going to end up at the moment? And technically speaking, which is one of the few things we have to go on at the moment, because the current movement is just purely based on sentiment, no fundamentals whatsoever. 28,000 points for me in my mind would be a critical level, and I'm happy to take my cuts there.